Hello and welcome to ETPFSI. Today we have a very special guest with us, Satyen Kothari, who co-founded Citrus Pay, which was later acquired by PayU. He is also an angel investor, and right now he has co-founded Cube Wealth. Welcome on the show, Satyen, and many thanks for joining in.
Great to be here, Ishan. Thanks for having me.
How did you come to co-founding Cube Wealth? What was the idea behind it? Just walk us through the journey of Cube
Perfect.
Wealth.
Great question. So I came back to Bombay. I'm a Bombay boy in 2010. And I had the concept of starting a PayPal for India,
Yes.
which started Citrus in the early days. So how to build a super simple checkout process, etc. The journey of Citrus is well known. PayU bought us in 2016 for $130 million. A very interesting thing happened when the sale went through. I'm from a very middle class background. I grew up in Santa Cruz in a one-bedroom house with 4 members of the family. So I was never taught how to manage money, how to grow money. But when Citrus was sold, I had all these wealth managers who showed up saying, "Sir, I can manage your money." And some of them were exceptionally good. So after I started understanding what services they were providing, I thought to myself, why is it that this was not available to me earlier in my life? Right? Because I was already 40 something when the sale happened. And then as I got to know some of them, I built relationships. I said, why do you not go cater to people who have, let's say, a few tens of lakhs? And they said, sir, it's very simple. It's a human-powered business. It just isn't affordable for us to cater to people with 10 lakhs, 20 lakhs. So me being an entrepreneur, I said, this is an opportunity. How do I bring design? How do I bring technology into the picture to say I'll reduce the work on the servicing part and the discovery part, but still provide the same high quality wealth creation opportunity to middle class India. And that was the aha moment. And now Cube has launched it 18 months ago. We effectively aim to build the perfect portfolio for every busy professional of India. And by perfect portfolio, we mean what a great wealth advisor would help you build. Everything from equity with great advisors to alternative assets to international investments, so you diversify rupee versus dollar. All of that in one package, digitally driven, but always with help available when you want, because it's your money.
Yes.
Sometimes you just need to talk to a human being.
Yes. So how do you go about, creating wealth for your customers? How do you onboard customers? How do you onboard advisors? And how does the matchmaking ultimately happens?
It's a very good question. It's a marketplace, right? So the marketplace requires supply and demand side. What we do is a lot of analysis on the supply side first to find the right partners, whether those are platforms like P2P platforms, digital gold providers, or when it comes to discretionary like mutual funds or equities, the right RIAs who have a right track record. So when we talk about platforms, we look at whether they are registered with RBI, for example, for P2P.
Yes.
Then on top of that, we put on our own layers to make sure that the customer's money is as safe as possible by requiring a certain amount of diversification in that asset type. When it's discretionary, like equities and mutual funds, we look for a long track record of proven success over the years. See, in 1 year, Ishan, anybody can be a hero.
Yes.
In 2 years, anybody can be a hero because you can get lucky.
Yes.
We look for 10 years at least. Right? So 10 years, you've seen the ups and downs of the Indian market. Are you managing a sufficient amount of money? If you are, then you come into the platform. The last step before we introduce it is me and my senior team individually all invest our personal money first to make sure we are comfortable investing.
That's interesting.
Before we offer it to any client of ours. Right? So if we are not willing to make that investment in our leadership team, we ask that person who hesitates saying, why not? And maybe they have a good reason. So it's a consciousness test. So I think we are very different from the general gamut where everything is driven around how much money you can make. We said if we solve it for the customer first, if we make our customer happy with giving a great, clean service, in the long run, we'll all be better off.
In the past 18 months, what is the learning you have seen? What are the asset classes customers are preferring? When you onboard them, what is the mindset that they come with? Like, because everyone likes short-term gains and long-term gains are, it takes a very long time to settle in.
Absolutely. It's an educational play, right? And you can fall into the trap of saying, I want to grow very fast. So you want to promise the customer too much. You want to sell them things based on, oh, this mutual fund did really well in the last 1 year. Why don't you buy it? Yes. Or if you buy this, we project this is how much you'll make in 10 years. We don't do that because that's wrong fundamentally. Yes. We are in a niche play. We are going after educated investors who say either I've tried it on my own and it didn't work for me, or I'm just tired of the stress of thinking about investing and I want somebody to handhold me. And with these people, we set expectations up front saying this is not a short-term game. We are not here for the short-term game as a company. You should not think wealth creation is a short-term game. And we enforce these rules. So for example, we have a feature called Perfect Portfolio today. You can try it on the app on Cube Wealth. First step it says is, do you have enough money for emergencies? Now, no wealth manager tells you put aside money for emergencies, because what do you put it for emergencies? You put it in fixed deposit or liquid funds, both of which effectively earn no commission for you. We say, please put it, because once you have 3 to 6 months of emergency money, you can start investing without worrying. Short term, there's a medical expense, there's a job change. You don't need to say, oh, which stock should I sell to cover it? Because what if the stock market's down then? Right? So we educate you saying this is the right way. So the perfect portfolio is a simple way to get you to 100% score by just checking boxes, saying, have I taken the 4-5 steps needed? So it's a long play. And we are happy to do that. This is my 5th company. We are going to be around for 20, 30, 40 years, guaranteed. We just enjoy doing what we're doing.
Coming back to which asset classes you have seen in the 18 months.
Very good question. So it depends on the mindset. So we have short-term asset classes, alternative asset classes, such as P2P, packaged in a certain way, which is consumer friendly. We do things like settlement financing, invoice discounting, equivalents. Those are very popular for people who want to park their money for 6 to 12 months. On the flip side, we also have long-term equity advisory or PMSs that are very popular with people who say, I want retirement money. Because across 700 AIF and PMS providers in India, we've filtered and brought in only 5 who meet our criteria. And the criteria is 10-year track record, significant amount of money being managed, and a return history of 20% CAGR. This is incredible. Only these 4-5 meet the standard. So these are the ones we bring into the system. So when a customer comes to us, they say, my search is very simple. I'm not searching by ratios, etc. You tell us how much money you want to invest. What is your risk level? Because that's very personal, right? You might be a very aggressive investor. I might be cautious. So it's important to take user psychology. And what's the time frame you want to invest in? Once you enter these 3 basic things, the search result is a set of assets that match your criteria. When you pick an asset, you see the advisor who we've suggested works with it. So you get the whole package deal in one flow. So these 2-3 assets are very popular right now.
Okay. So what are the nitty-gritties involved with your backend apps with AMCs and P2P players? How do those partnerships work out for you?
So it's a supply side partnership. With each one, we don't change their business model too much. We say, what is your distributor channel structure? We'll apply to that. I think I'll be very transparent with you. It's tough because on one side, we are trying to say to the customer, we are on your side, but at this other side, we are making money from commissions. And we know this is not ideal. Over time, I would love to charge only the customer and never make commission on the back end. India's not there yet, right? The customers don't like paying yet. I think there's hope in 3 years, 4 years they will. And we have plans on how to move that. I think customers are just very used to the fact that whether it's their bank RM or whether it's the neighborhood mutual fund uncle, he just comes or she comes with the form, says sign, you don't have to pay anything. Not realizing that somebody is definitely getting paid somewhere. So we are transparent where we say we make money on it. We don't charge customers. But this is a problem that I want to personally solve over time.
So basically, you would want to democratize the whole wealth management business
and align it, right? So align everybody to incentives. My ideal goal is that a company like Cube, when we make money for you at the end of 1 year, you give us a percentage of the money we make. We make nothing on the backside. That's perfect alignment for everybody. And each of our asset providers should only make money when they make money for the customer. So if I make you 30% profit in a year, you don't mind sharing 4-5%. Right?
That's interesting.
But when you invest the money, 100 rupees, and if I take away 3% right away, that's not rightly aligned. But that's the ideal world. We'll get there.
So what are the risk management practices you have put in place, and how, I mean, it's a pure play technology platform. Can you share some more insights on how the system has been built up? Sure.
So some of these are regulatory, some of these are policy risk management, some of them are technical, right? So in terms of regulatory, for example, the money you invest through Cube is always in your name, in each of the asset classes. We are not a wallet, we don't hold it anywhere. It goes from the payment gateway's account, which is effectively an escrow account, directly into your investment. So if you want, you can call the asset provider directly and say, send me my statement. It'll be exactly what Cube's app shows you. So that way we are not touching money, which we like. It gives everybody more confidence. Second is on the policy side. One of the very important things for us is to make sure that we save customers from themselves. Every investor in either greed or caution will make mistakes. So for example, a simple risk policy we have there is, if you want to invest in P2P, you might be able to go to even one of our partners and directly invest and give a loan only to 1 or 5 people. Our system enforces that any investment you make in P2P is given to at least 30 people. Right? So this automatically averages it out the risk, even though your return might be a little lower. We do that kind of due diligence with all our partners. And the technical risk, fortunately, the Citrus experience showed me that there are things to worry about, but there are things you can do. So we are all hosted in AWS cloud. We put all the security measures. We like testing it out regularly. So there's multiple ways to make sure the system's secure.
That's interesting. How big is your team right now, and what are your plans for 2020?
Yeah. So Ishan, I always have role models, right? Or companies that are my role models. So HDFC Bank is a great role model for me in how steadily it built up a large, trustworthy enterprise. Amazon's a great role model in how it built over time. On the team size, this is a very interesting question. Every startup founder is asked, how big is your team, as if it's a proxy for how well it's doing. My role model there is WhatsApp. When WhatsApp was sold to Facebook for $18 billion, it was 50 people. So our team is very small. We are under 30 people. We do engineering in-house. We do design in-house. We have support, we have wealth coaches, as we call them, in-house. We want to keep the team small. Everything's built. Our head of engineering and my engineering team sits 5 feet away from me. Every day there's a discussion about things that are important. They're very different from a large corporate entity which might be doing wealth, etc., which will have committees, etc. And we have a lot of agility for that. 2020 plans are very simple. Last year was a great year for understanding what's the product mix our customers want. So this year we are now going to do customer servicing to another level. Right? Make sure our existing customers have, now that they're comfortable, invest more with us. Have them talk about us in public, because this is not a business where you can put up a Google ad and people show up. You need confidence and credibility. So we are counting on our customers becoming our evangelists. So very simple goal, right? Make our customers happy, and once they're happy, encourage them to talk about us to their friends and family.
That's interesting. One specific you mentioned about, now Indian investors can invest in the US markets. What are some of the regulatory challenges over there, and how does that work out, if you can share some perspectives on it?
So this is a very interesting option that's come up recently with a few companies. We partnered with one of them called Stockle, who also, by the way, partners with HDFC Bank. And what we do is we use Stockle as the backend pipe. The regulatory environment for Indians investing abroad has always been very clear. You have a LRS option per PAN card of $250,000 you can send abroad, which is obviously quite a lot for most Indians. Once you send it there, it is obviously to be kept in a trackable account. You can't just go around and spend it on random things. So it typically is property, stocks, etc. What we've done in Cube is we've streamlined the entire process, so it's almost digital. You sign up, do all of the qualifications on our app. That creates a LRS form that you're emailed. You sign it, you send it to us, it goes to the bank for processing. In parallel, while this is being done, a US brokerage account is opened for you by us and our partner. While all of this is done, you can do research on which stocks you want to buy and you tell us which ones. The moment your money reaches the US, we can place that stock order for you. On top of that, we've tied up in our core Cube model that you don't know what to do. There's always a great advisor. We've tied up with a superb advisor in the US who's award-winning, manages millions of dollars, actually manages $130 million for HNIs in Silicon Valley, to say this person's advice is available to you sitting in India on the Cube app to tell you which stocks or ETFs to buy in the US. So you get the whole package deal, everything digital, move your money through Cube, brokerage account is opened, you track that brokerage account through Cube on what you bought and sold, and you get a US advisor there as well.
What is the time duration taken by this?
So the longest duration is taken for the LRS that your bank takes. That takes about 2-3 weeks. It's not in our control. It's each bank is changes its time frame. But the beauty is once it's set up, it's instant. So now you can trade and say you want to buy Apple or Google. You tell the Cube app, and the moment the market's open, it's instantaneous there.
All right, Satyen, those are some really great insight. Pleasure talking.
Pleasure, Ishan. Thanks so much.
Thank you for watching ETBFSI. Stay tuned.